Hey everybody, what's going on? It is James here. I want to talk about the fact that while I am a bear, it is important that you never believe anyone knows what's going to happen. And so I'm going to show you some bullish things as well as some bearish things in this video and remind you that I think my favorite quote of all time is Mark Twain's quote, "It's not what you don't know that gets you into trouble. It's what you know for sure that just ain't so." So for all the perma bears on Bitcoin who are just convinced it's going down and they refuse to acknowledge there's any other scenario, if they're wrong, it's going to be extremely painful for most of them, because most of the people that are very loud about Bitcoin, bear or bull, they actually do have a lot of skin in the game in terms of they're betting and hoping that, it makes or breaks them in the future. And for the Bitcoin bulls who are absolutely convinced that because it's always went back up in past cycles, it has to go up again, they're also playing a very dangerous game because history does not always repeat. So I want to stress that if you are a bear or a bull, you should be using proper risk management and taking some type of hedge against your position. Like me, I'm a bear. My bearish bet is very simple. If it goes low enough, I'll probably pick some up. If not, that's okay. If I never buy Bitcoin again, I'm perfectly okay with that. If you're somebody who absolutely wants to own Bitcoin and you're simply trying to catch the perfect bottom, you're playing a dangerous game. Even though I am bearish, I acknowledge that it may not go as low as I think it will go. In 2021, I really felt pretty strongly it would go to 8 to 12,000. It did on some exchanges. I actually got fills down around $8,900 was the lowest fills I got over on Binance.us. It had a flash crash. And so I did get fills down there, actually made an enormous amount of money in like a 2-minute span because it actually was in October 2021, flash crash, and then went straight back up within 60 seconds. So it did hit those targets, but on most exchanges, it only got down to around 15.5. And while I had said 16 was a potential target, I was strongly convinced that 8 to 12,000 was going to be the bottom. And so I only bought a small amount of Bitcoin around 16 something. And I didn't put, I had a much larger bet that I was willing to make at 8 to 12, and I never got that bet on the books. And so ultimately, that cost me a lot of opportunity cost, if you will. But it was fine. It was a bit of a mistake. I fully admit that it was a mistake. I should have bought more. I was a little bit too conservative, but that's the price I paid. So in this video, what I want to talk about is, I think I'm going to start with the QQQ. The reality is this: people who are investing at these levels, I strongly disagree with that approach to this market, but it doesn't mean they're wrong. It means that's my opinion. The reason that I strongly disagree is because we are seeing levels being tagged that have only been tagged a couple of times in history. So we're going to talk a little bit about fundamentals. I'm going to talk about technicals. I am going to talk about Bitcoin. I am going to talk about the stock market. All right. So if we look at P&E ratios, and for those of you that don't know what this is, a P&E ratio is simply a price to earnings. Basically, how much is a stock worth versus how much the company is earning. And if we use Shiller P&E ratio, which is adjusted for inflation and uses like a 10-year rolling average kind of deal, if we look at this is a yearly chart. So each point is 1 year, okay? This was the Great Depression right back here, okay? 1928 peaked, and the valuation's basically at roughly 25 PE ratio. About 15 is considered value stocks or value buying amongst many people. I think Warren Buffett's mentor actually came up with that. 15 is the number you want to look for. So that would be down around this area and here. We can see that in 2008, during that great crash, it actually tagged that level, and it was probably a generational buying opportunity. But we can see that the dot-com bubble actually went completely bonkers, and PE ratio reached 44 right up here. And I'm seeing people on social media who are like encouraging friends to put all their savings into the stock market, telling people it's dumb not to be invested, and they're wrong. It's absolutely not dumb. Now, it's dumb to put your money in cash because cash loses value every single day. if you are not invested in the markets, then you want to do your due diligence and look at things, like CDs that are earning interest, or bonds, or T-bills, or ETFs like SGov. There's some other ones out there, VTIP, VTIP, which is an inflation adjusted ETF. Like, there are things that you can put money in that earn returns without being, overly exposed to the beta risk of the market. And so if we look right now, the PE ratio, this is basically on roughly, the whole market, it's at 40, which is an all-time high, excluding the dot-com bubble. Again, this chart goes back 150 years. So stocks are currently at the second highest level in history. When you look at that, what you have to understand is, if you go forward and say, well, how much am I going to earn? What type of return can I expect going forward? The answer is probably not what you think. The market could crash, in which case, you would be down underwater, but the market's also potentially going to move sideways. Japan had its horrible bubble. I can't remember when it was off the top of my head. I think it was the 80s. And then they had what they called the lost decade, okay, where the market basically just went sideways. And we could very well see the same thing in U.S. markets, because we've been overheated so long, and because of politics and other things that, I'm not going to get into in this video. Nobody wanted to let nature take its course, and so they kept reinflating the bubble. And what they've done is they've now created one of the worst bubbles in recorded history. And the AI bubble, when the market started to roll over in 2022, of course, AI saved it and pushed it back up and reinflated it. And that was less policy making and more just circumstance. So from an investment standpoint, I think we're at a very, very dangerous point. I don't want to be buying stocks personally when they're 40 times earnings. I want to be buying when they're down around 15 if I'm investing long term. Okay, so short term, does that mean that it's time to start shorting the market? Based off of that, absolutely not. That's not enough by itself. And one thing that was happening, you guys, if you watched my last video, I said I was in a short position. I actually opened some puts up around this level here. I was looking for the bottom of the range. When it hit, I closed some of them, but I kept some because I was also looking for potentially more downside. I felt like this was distribution and that this was going to go lower. This pump, this straight up pump, caught me completely off guard. I was in some naked shorts. I entered those around 596, and I got stopped out when it took out the top of the range. It's perfectly fine. That's how trading works. You don't win all of your trades. So this was a surprise. The bearish scenario here is that this is still distribution, that this was actually, I'm not going to even put the chart on there. I'll just kind of explain it real quick, that this was the buying climax back here, that this was actually an automatic reaction. This was what's called a strength test, that this was the signs of weakness, and that this is actually what's called an up thrust, or UT. And if that's what's happening, if the bearish scenario is this, if it's a UT, it should come back down somewhere around this area. It should bounce up again, maybe stop here. On one version of the schematic, the other schematic, it'll actually go higher, and then eventually it'll enter when I say higher, not a lot higher, but maybe like, 700, 750 if it goes the second schematic, and then eventually enter the markdown phase, which would actually look more like this here. Okay, that's one scenario. The other scenario, of course, it just has a weak pump, which last point is supply pump, and then does this here. Okay, that's the distribution scenario, and that is still the way that I am personally leading. I think that is what is happening, okay? So what mistake did I make? What caused this to go straight up and somehow I completely missed it? Well, zoom out. I had said at the time, I think I even did a video saying that this could be a pullback just to the EMAs. And I saw that. I noticed that. What I didn't notice, because I was looking only at QQQ and not the futures. See, on QQQ, this actually closed a little bit below that. But watch this. Didn't even see it. I was just not paying attention. Here's the futures. Here is the low back in November. Look where March closed at. It went below, trapped all sorts of bears, and then closed right back in that level. This was a bear trap. All right, so the sign was there. So what we have to do is over the next couple of weeks, the market's going to tell us what's happening, right? The market is going to either pull back down inside of this range, and this is going to be you might be seeing it already, If it pulls back inside of it, that's going to be a bull trap. All right, look at this monthly candlestick. If this closes back down inside there, we'll have the exact same thing, only in reverse, which is what sends a market down. So we have, about 9 days left in the month, 9 calendar days, and we'll know when April closes. If this closes above this range, it's probably going higher in the short term. If it closes below that range, it's very likely that the distribution is what's playing out. All right, so that's what I would say is keep a very close eye. Where does the April candlestick close? Also keep in mind that the old cliche, sell in May and walk away. So maybe the markets are just, pumping so that the bigger players can get their exit liquidity that they need. So that's what I'm thinking on the QQQ. What am I thinking on Bitcoin? I don't want to go super deep into it because I did a really long video a few days ago, and the video's, it's not super time sensitive where it only mattered that day. The data in it, the information in it is going to be good, for at least a few weeks, maybe a few months. So I'll probably just post that video. What I will say about Bitcoin in this video is 2 things real quick. One, and I think I covered this in more detail in the other videos, so I won't go deep. There is a head and shoulders sitting there. It is a confirmed head and shoulders. We had a volume confirmation, right? You put volume, see the massive spike in sell volume. So we do have a confirmed head and shoulders. It has a target sitting around $35,000, which winds up with this past accumulation range. Okay. Also testing its 19-week moving average, which tends to be, in earlier cycles, it tended to be a really, really good spot. It was less reliable during the 2021 market. We saw that it just kind of got ignored during its highs. All right. Those are things to watch for. Again, I'll post the other video. That way I don't, I'm not redundant. When you take a look at the market cycle chart, keep in mind that everyone expects this to play out like exactly every other time. This market cycle is different. I don't know if it's different and it's going to go up, whereas a lot of bears are expecting to go down. I don't know if it's different and it's going to go down and not have a new high. I just don't know. This is an anomaly. This is not what the market should have done if it was falling past cycles. This is versus the QQQ. This should have been optimism and we should have got more upside. That's why I was saying late last year that I said, hey, I think it'll go to 35 to 45,000 when it crashes, but I think it's going to head to 175 or 200,000 first in that blow off top, because you're supposed to, quote unquote, get a blow off top where the market has a rapid doubling and then comes undone. We didn't get the doubling. We just rolled over, which was not what I was expecting. I was fortunate in the fact that I went ahead and took profits on most of my cryptocurrency when Bitcoin was around 115,000, just because I didn't feel like the reward justify the risk. All right. So there's some anomalies to keep an eye on. I do not remember if I covered it in the last video, so I'll cover it super quick in this video. You've got to keep in mind that Bitcoin is behaving differently versus other assets. And so, for example, one of the narratives is Bitcoin is digital gold, but that doesn't hold weight or hold water when we actually look at Bitcoin versus gold. So gold and Bitcoin have had equal or similar returns over the last 9 years. That should be alarming to you if you're a Bitcoin permabull, because Bitcoin is a speculative asset and yet it's going sideways versus a store of value. And again, one thing, there is a phenomenon, I can't remember the name of it, but there's a phenomenon where when you're looking for something, you're going to see it. So for example, if you go out and buy a Ferrari, okay, maybe you haven't seen a Ferrari your whole life in real life, but you go out and buy a Ferrari and now you're suddenly seeing Ferraris everywhere. Probably a bad example because Ferraris aren't everywhere. Let's say you go out and buy a Mustang, a Ford Mustang, right? And now everywhere you go, there's a Mustang, there's a Mustang, there's a Mustang, right? I'm going to have to look up what it's called. It's called, I do not know how to pronounce this. I'm sure I'm murdering it, but maybe Bader-Meinhof phenomenon. It's a cognitive bias. I just looked it up on a cognitive bias where after you first notice or learn about something, you suddenly start seeing it or hearing it everywhere. So I learned about Wyckoff distribution and Wyckoff accumulation many years ago. And so I see these patterns everywhere. And sometimes they may not exist. It's just me like seeing it. And so, yes, I see this as Wyckoff, just like I see the current QQQ as potential Wyckoff. Remember me saying that This pump could be the upthrust. That would be this point right here. Okay. That's why I say that it may go back down and then have one more pump and then roll over. This is the same thing I see on Bitcoin. Like when I look at Bitcoin versus gold, I have a cognitive bias, fully aware of it, but this is what I see. It looks like distribution to me. I see the same thing when I look at it versus the Mag 7. Several months ago, toward the end of last year, it looked like in August, I posted this up. Same thing, right? Other than for some reason I mislabeled it. This was not an upthrust after distribution. This is actually what's called a last point of supply, where it doesn't take out the upthrust. But I was hypothesizing that Bitcoin was about to roll over versus the Mag 7. In other words, if you had to be exposed to the market, it would be a better investment to get your money into Mag 7 and out of Bitcoin. And this is what happened. It rolled over badly. This is a log chart, so it's like, well, it's just a little pullback. No, that is a 50% drop, a 50% crash versus Mag 7. So if you had 100 grand in Bitcoin and you put it in the Mag 7, it would have performed twice as well as holding the Bitcoin. Those are signs of distribution. That's a sign of relative weakness to the market. Why is Bitcoin underperforming the US dollar? Why? And when I say underperforming, I'm talking about versus the US dollar. Why is Bitcoin underperforming the Mag 7? Why is Bitcoin underperforming the QQQ, the tech market as a whole? Why is Bitcoin underperforming gold? Why is Bitcoin underperforming silver? So here's Bitcoin versus silver. Right now, it takes 986 ounces of silver to buy one Bitcoin. In January 2025, it took 3,500 ounces of silver. So versus silver, Bitcoin is currently down 72% from its peak. In fact, right now, it's sitting below December of 2017 levels. This is a regular chart put on a log chart. Again, that looks like distribution. Is it distribution? Maybe, maybe not. But you look at this. It's literally just tested the bottom from the 2022 bear market. That actually could be bullish, by the way. That could be, a sign that it's bottomed versus silver. Maybe it's going to pump from there. I don't know. All I know is that people are still screaming about Bitcoin being this wonderful investment, and it's not. Because while the tide has been rising, and the tide is, all boats rise with the tide, Bitcoin has actually been sinking. How is Bitcoin going down when the entire market is going up? You should ask yourself that question. You don't have to decide to sell all your Bitcoin or short Bitcoin or hate Bitcoin, but you should be aware of what is actually happening. It is entirely different from any previous Bitcoin cycle. This is not normal Bitcoin behavior. Look at this chart. We've retested the 2022 low. Did 2022 retest the 2018 low? No, it got nowhere near it. Did 2018 retest the 2015 low? No, it got nowhere near it. So why is 2026 retesting 2022? And again, I started the video with P&E ratios. I started the video with saying that, looking forward into the future, I think the market is going to underperform. I think the earnings, are going to have to return to reality, get back down around that 15 level eventually. And if the market tanks, historically, we've seen Bitcoin tank with it. It also stands to point out, which I did not know this until today, I'm not a big follower. Maybe I should follow more people. Maybe I shouldn't just live in my bubble. But somebody had posted about Warren Buffett being on one of the biggest the biggest cash reserve ever. And the only other 2 times in his career he was on large cash supplies like this was before the dot-com bubble and before the 2008 recession. I didn't know if that was true, so I went and fact-checked it. It is, in fact, true. Warren Buffett is sitting on an abnormally large amount of cash. Warren Buffett's approach is this. Warren Buffett is not saying, I think the market's going to crash tomorrow. Warren Buffett is simply saying, I'm not willing to overpay. I will wait until I can get a deal. And that is my approach, okay? It is not that I don't think the market can go up. QQQ could literally double from where it's at. That is absolutely possible. I don't think it's the most likely scenario, but it absolutely could have a blow off top where it actually doubles. my thought process is more along the lines of how Warren Buffett operates. I think to myself, as an investor, not a trader, but on the investing side, will I have an opportunity to buy this back later at a better price? And when it comes to QQQ and the SPY and most stocks, the resounding answer in my mind is yes. I think I can get a better deal later, even if it goes up temporarily. It's kind of like, I'll use my car as an example. My car is a plug-in hybrid, right? We've got a Mazda SUV, it's a plug-in hybrid. And so I don't have to get gas in my car unless I just want to. The last time I got gas in my car was February of 2025. All right. So about 14 months ago, the tank is pressurized to keep the gas from going bad, if you're wondering. So I was actually about to go get gas a few months ago. I was down to like, 50 miles on the gas tank. Of course, I had the electric. And so I was like, I need to get gas. And then the, Iran war broke out. And when it did, gas skyrocketed. So I was like, well, I'm just going to wait. I figured gas would climb higher before it eventually came back down. But I have the opportunity to wait because I don't have to use gas in the vehicle. I can just use the electric. It has like three modes. I can use, well, really two modes, right? I can put it in sport mode, which is like uses a lot of gas, and then the electric gives it like 500 horsepower, like total. Or I can put it in a normal mode where it mainly uses electric but uses gas once in a while for extra power. Or I can put it in pure EV mode where it only uses electric and will not touch the gas. So what I did was I simply said, I'm not going to buy gas because it's overpriced. I will wait for gas to come back down. Eventually, I believe that'll happen. It may take several months. I have the benefit of waiting. That's how I approach markets. It's not that I don't think they can go higher. It's that I don't want to play hot potato and be dancing on the edge of a cliff, investing all of my money when I know the market is overvalued. I will wait for the market to come down. It will eventually come down. History shows time and time again, markets always return to their mean. It's not a matter of if, it's a matter of when. By the way, sometimes that is through a sideways correction where the mean catches price versus price crashing. So keep that in mind. But if that happens, that's fine. Any way that it happens, whether price goes down and so the PE comes down, or whether earnings go up and price stays the same and the PE comes down, fine. As long as the PE is where I want it to be, right, the PE ratio, then I'm more apt to get involved in markets. Until then, I'm going to be very, very conservative and very risk adverse. And the money that I do have, most of it is in places that are safe, earning a decent return. And, it's beating inflation. And so I'm not losing anything. I'm just simply missing out on gains, and gains that I personally think are temporary, right? People bought Bitcoin at $80,000 in 2025, and then they thought they were a genius when it was worth $125,000. They probably don't feel as much like a genius now that it's under 80,000. Keep that in mind. All that being said, it's a long video, so I'll wrap it up there. Please remember, I am some guy sitting in a spare bedroom. Nothing in the video is financial advice. You should always go out and do your own due diligence and seek out professional financial advice from a licensed financial advisor for making any type of investment in cryptocurrency, the stock market, precious metals, Forex, or any other tradable asset. As always, please remember to give the video a thumbs up, subscribe to the channel, leave me a comment with your thoughts, and most importantly, use proper risk management and trade safe.